Our live Trading Week Ahead broadcast at this time. So good morning and happy Saturday, traders. I hope that y'all have been doing as well as I've been doing lately. We've got really good volatile markets to work with. The challenge is isolating and scanning for and identifying the best chart patterns and trading them more consistently. And developing consistency is a foundation of careful risk management, number one, but number two, finding more consistent charts. And so hopefully I can help give you a few thoughts along those lines in today's live broadcast. This is one of the longest, if not the longest running webinar series in the whole industry. We're almost up 5,600 people registered for this, and we've been running these, I've been running these for going on 7 years now. So congratulations to the thousands of you who have registered. I appreciate it. As always, all information is for educational use only. That's called Social Proof 101. It's like, yeah, he's worth listening to. 6,000 people would say, I think so. So anyway, I appreciate it. You guys have been amazing with your support. It means a lot to me. I really appreciate it. Anyway, let's get on with it already. So all information is for educational use only. I've got a live Trading the Open house. I only do these once every 8 weeks, so it's rare. I only do 6 of these a year. This Monday at 9 o'clock in the morning. So join me at tradingtheopen.com/free. That will take you to, that'll auto forward over to the GoToWebinar registration page. So if you're not yet one of the, I think we're well over 1,000. Let's see how many are registered. 1,292 have registered for that. So if you're not yet one of those folks, join me and see how, and I'll be doing live real money trading in my live trading account with P&L Proof. So unlike everyone else, I actually trade what I call. You may want to get my Winning Swing Trading Charts ebook. Basically, it kind of documents some of the winning swing scans charts that our members have gotten over the last few months. And you can get a hold of that in the free members area. And to get that, just go to trademastery.com/join. And that's right at the top of the free members area. You can click on the PDF and download it and hopefully learn a few things. I've gotten a lot of great feedback from it. If you haven't yet sent in a testimonial, go ahead and do so, and I'll add those to the ebook future edition. So I appreciate that. I've got a winning day trading charts volume 1 in the works as well. So look for a release of that coming up soon. If you don't yet have my Tape Reading Revealed course, you can get that at tapereadingrevealed.com. It's an hour-and-a-half long downloadable video and PDF and MP3 course. And we covered recognizing rockstar charts in our coaching session. So let's take a look at that wacky S&P. What the heck is going on? We had a bearish engulfing here, but then we had another bearish candle, kind of a doji. That doesn't know what, that's indecisive. For more on candles, learn from Steve Nissen at www.candlecharts.com. I learned so much from Steve. What he teaches works, so that's cool. I've used it for years. Anyway, bearish engulfing here, so that was a sell signal on loss of support, but it faked us out and came back to life. It's still alive and kicking. We'll see if it breaks over resistance at 2960 or under support at 2900. I've got specific better triggers for my swing scans members, but that's kind of the rough area. Is a 5-day high and low in the market. So we'll see if we break to new highs next week. Good charts that I've been giving you guys the last week. One of our picks last week, PPC, really continued to run on up. Many of my charts continue to run up, but this is the best chart out there, so congratulations if you got a piece of this. We covered this in the coaching session, so I won't go through a lot of detail on it, other than that we have an acceleration ramp with a lot of green candles, and we'll see if it's able to continue on up. Our next pick that our Swing Scans members got was TER. And this is a nice gap continuation. Now, the cautionary note on this is we got quite a few doji and some uncertainty. This is telling us they're relatively uncertain. I prefer candles that look like this, that have virtually no upper shadow or no upper tail. These, on the other hand, do have a sequence of upper shadows. But, voice of the West, who can tell me? Name that chart pattern. This is the part where you type in the name of this chart pattern. This is the audience interaction portion of today's broadcast. With over 5,000 of you registered, I appreciate it. What's that Western pattern? The candles urge caution. Whenever, quick professional traders tip, when you see divergence in any indicator set, you still take the shot, but do lighter share size. Okay, so the candles are telling us what I call melted candles, right? They're kind of flat. We've got a few doji in there. We don't see nice big progression of large green candles marching on up. So for that indecisiveness of the traders, that portion of my decision-making process says, instead of doing a large share size trade, I'll do lighter share size. But the voice of the West is chiming in and saying, hey, we've got a bullish what? Right, Bob, Harvey, JP, Shannon, Murray, John, BW, Bob, Ahmed. It's an rising wedge or ascending triangle or flag, right? Right, JP, right. So, thanks, Chris, about great advice on the minis and spiders. That's really important too. Very binary. Whenever I'm looking at the market, my first thing I do, like 4 in the morning my time, because I'm up early for all my live room traders, is I'm looking at the spiders pre-market, and are we gapping up or down? And if we're not, if we're parked right in the middle, that tells me I don't want to go trade the TVIX or the TQQQs. I want to instead shift over to whether it's small cap gappers or other gap stocks. So you trade markets or trade individual stocks or trade both. And that decision is a function of the futures, right? What's going on pre-market. So, and that's good intel. That's valuable intel. So, but yeah, you guys got it right. So voice of the West is it's a bullish pattern. Voice of the East is not quite so sure about it because we got some doji, some uncertainty. So together that means, yeah, I'll still take the shot, but I'll do, if it takes out new highs, but I'll make a smaller share trade. I won't do like a 300 share trade on a breakout because of the uncertainty of the candles. So. And by the way, keep it simple. This doesn't have to be rocket science, folks, but it does have to be intelligent. You're trading with or against, guys like me and other smart traders out there, and we've got a careful, well-defined plan of action based on very specific both market internals and the sector strength, and also the relative patterns of each of these charts. Now, this guy, on the other hand, as opposed to, what do you guys notice? The difference between the recent candles and this? Kind of ambivalent, right? We got an ascending triangle, but compare and contrast those. I used to teach, I was adjunct faculty, I taught 104 graduate and undergraduate courses for various private universities back when I was consulting. I still work my butt off, even back in the day. Anyway, what's good about this gap? What's good about the nature of the candles that constitute this gap? What makes me feel good about this? There's a couple of technical signals. Excuse me while I have a sip of coffee here. I don't mind sipping coffee in front of 742 people. It's, pardon me, but I need my caffeine fix on a Saturday. So, okay, right, Mukesh, Phil, Brock, big volume spike. That's smart on the first. That's one thing that I didn't think you guys would get, but you're right. So hats off, you got that. And large candles, right? Everyone else is saying large candles. And Frank, Bob, Harvey, Mukesh, Phil. Right, so we got large candles. And also the last one, which nobody mentioned, we have that pair of increasing candles. I don't think anyone got that. Well, yeah, Harvey got it right. We got a larger, medium and a large, venti and a grande or whatever. We got a medium and a large candle, and volume was really healthy on the gap. And also another bullish pattern is that we didn't do a mean reversion or a fallback or a flat day after the gap. Often that's what you expect. Most of the time after a gap day, you get a flat resting day or a pullback mean reversion day, or it doesn't do not a whole lot of stuff going on, which is why I don't like to buy the day after a gap. And that was correct on this chart as well. I didn't buy the day after the gap because it was an inside range candle, but it's a relatively strong inside candle for a gap day after a gap. That's a good candle, and that led to skyrocket up yesterday, right? If you look at the pattern yesterday. So that's a nice open range breakout, schwang, and of course it stalled right under the whole number, right under 14. So some really good charts to work with. We're about halfway over. Let's see. U.S. Steel was the pick of the day that I was trading yesterday in the live room. After this big epic sell-off from 24 down to 14, it came back to life. I'm waiting for my inverse ETFs to come back to life as well. Anyway, that was the US Steel chart yesterday. And you know, those kind of charts, like I was teaching earlier, you're looking for embedded cup patterns. That's where you've got a large, the large cup is here. It's here. This is kind of the small embedded handle or cup and handle. This would be another small bullish cup. Anyway, that led to a breakout trigger. I called it long yesterday. I didn't see it till it already ran up there to a bull flag. And this is, those of you familiar with bull flags, it's a bull flag. And so I bought it right above the 1580. We're right at, I think my order fill is right at 1580, right above the bull flag breakout. So you have a bullish cup, an embedded handle, and a bull flag, and that led to the breakout call. The one for my members yesterday, if you were there, you saw it, right? 1580. We nailed it. Boom, flawless victory. That's what you're trying to get at as a trader. Smart charts, tight stops, intelligent risk, and a consistent approach that makes sense. That's why we've been so popular for 20 years. So I appreciate y'all being here. A bunch of people registering. Yeah, remember to get that free swing trade. And it's good too. You have my word on it. It's got a lot of good. Mostly it's kind of there to show people the kind of charts that they get in swing scans. And so it's kind of a compendium of a lot of the winners we've had actually most of it the latter part of last year, like October, November, December, and a few recent ones too thrown in for good measure. That's at trademastery.com/join, and that's free. No credit card needed or anything like that. So you can get free access to that ebook. So, and I've got more coming. I've got more swing trading, more recent chart examples from the last few months coming, and so much more. What else do we have for you? And just a reminder, I do have the Trading the Open live room free open house coming up Monday. I was talking with a colleague yesterday. She's brilliant, and she was saying the same approach. She's been around 20 years, as have I. We like to kind of build rapport with the traders, and that's why I do so much free content, is so that you can see, you know, hopefully I know what I'm talking about, and I back it up with real trade proof, and you get to know me and test out. You know, whenever I speak at money show events, I always ask the question, and everyone raises their hand in agreement, or almost everyone, that how many of you would agree that you should be able to test out an educator's free content, make it pay for you before you consider spending a dime with them on their paid content. Everybody's hand shoots up. That's how I've done business for 20 years. So I give away a lot of free content with the hope that it will earn your trust. And I like to earn trust the old-fashioned way, you know, grind things out, build trust over time, and then you say, okay, maybe I'll give him a shot. Maybe I'll order some of his stuff because he seems to know what he's talking about, and I tested it out in my own trades, and his clarity of thinking and his techniques and his processes actually work a lot of the time. So that's why you see so many hundreds of testimonials on my site. Anyway, what else we got going on here? Let's see, Sector Watch. Insurance looks good. Biotech looks sucky. That's a good technical term, sucky. Banking, intermediate. Nah, it's meh. MEH, meh. That's interesting. Finance in the NASDAQ is stronger than banking. Usually they're highly correlated, but not so much. The banking, so banking by itself is just okay, but the finance in general, which is a broader brush in NASDAQ, is even better. What else? Other sectors. Our VIX is down. Gold is way the heck down. So again, with gold down, long plays an instrument like the inverse dust makes sense. I was trading dust successfully on a pivot earlier in the week. The screen caps both on my Twitter and on my Instagram. Oh, by the way, be sure to register for my free Instagram feed at instagram.com/trademastery. I'm late to the party with Instagram, but I'm going to come at it with a vengeance. So I've hired a really good, actually 2 social media consultants to help me with my Instagram campaign management, and look for a lot of advertising and a lot of post and engagement. I've already got a lot of people subscribed. So anyway, gold is weak. So for that reason, dust is up, and dust may make sense for swing and intraday trades. I like to day trade I do an arbitrage play. So I'll trade dust versus nugget. You know, if one's breaking out to new highs, I'll buy it. And of course, the other one's going to be breaking down to new lows. I'll put it in order to buy it in case it pivots up. So an arb approach is intelligent. You know, dust versus nugget, right? What's our semiconductors look like? Still modestly strong. And the NYSE pharmas are just okay. So the strongest sector of the bunch is clearly insurance. So from a sector standpoint, insurance number one, and the NASDAQ financial sector is number two. You kind of drill down from the stock market into industry groups or sectors to kind of give an expectancy, especially important during earnings season, for directional volatility in various sectors and see which, you know, so keep in the back of your mind, if you see a hot insurance stock, it's probably, I won't say a safe bet, but a smart bet if it continues on up next week. I think that about wraps this up. Got a few minutes left. Let me know if any questions. Let's see. Oh, thanks, Ahmed. Yeah, strong to weak sectors. A question from Nan about U.S. Steel on the thing. I think I took a break even on it. One of the things that I normally do is trade larger size. To avoid getting stopped out in choppy charts, which is the technique I normally use. That's the insurance sector chart. Good day for insurance yesterday, right? Is often, though I didn't do it yesterday because it was a Friday and it was late, so that's why I didn't do it. Normally, I do intraday swing trading for trades that hit before, say, 9:45 or 10 o'clock at the latest. But normally what I'll do is do like a 150 shares trade and use a tight stop on the 100 and a loose stop on the remaining 50 shares. Or say a 200 share trade, I'll do a tight stop, 20 to 30, 40 cents on the initial, on say 150 out of 200 shares, and then use a larger stop of maybe 40 or 60 cents on the remaining 50 shares. So that way you scale out of a position. So that way if I get, and it works very often too, I found. You have my word on it, it's a good technique. I've got the, I don't have much time left here, but let's see if I can pull up the deck here. Here's the strategy to avoid getting shaken out of. By the way, I've been running Trading Open since August of 2000. So going on 19 years in business. I've been around for a long time and earned the trust of thousands who've been in the room for good reason, right? I am the founder of the original Day Trading University. I changed the company brand over to Trade Mastery because half of my traders are swing traders, and I also own Swing Trading University, but rather than run a bunch of university sites, I thought I'd move over to Trade Mastery. But anyway, all these winning trades. And by the way, in day trading, like I teach my traders at Trading Open, I'm an advocate of very tiny $20 or $30 stop losses, which means small share size with tight stops. This kind of a momentum approach with expensive stop losses is for morons and people that want to blow up their trading accounts. So you shouldn't be trading 1,000 shares of anything as a day trader. That's completely stupid, and people that advocate that are lying to you. Often they'll run mirror accounts. They don't tell you this, but I know a lot of the behind the scenes foolishness that the public doesn't know. A lot of these young guys that run momentum cheap stock chat rooms have a confederate go short while they're going long. So no matter what happens in one account, if they lose, they make it up in a different account that they don't tell the public or they're sheeple in the live room about. There's a lot of BS out there in the industry. If it sounds too good to be true, nobody turned a few $100s into hundreds of thousands of dollars in a short time frame. It's a bunch of BS. So anyway, use tight stops that are very cheap. Give yourself a law of large numbers, a lot of shots to get things right. And my word, that's very important that you understand that. Anyway. Anyway, there's different techniques that I teach. like a scalp plus an intraday swing. You can say like buy 300 shares of something at 25.5. I always use limit orders. I use buy stop limit orders. I don't hotkey in. If the price is at say 25, I'll put in the buy stop order at 25.5. So I'll only get filled if it keeps going up. If it doesn't keep going up, I don't buy it, right? I play it safe. Sell most but not all of it with a 8-cent or very tight trailing stop, and then sell the remaining 50 shares with a much larger initial stop. And what that does for you is it's a very smart dual exit approach. It's a single entry, but a dual exit, a tight exit on most of the positions, so you limit your upfront risk, but a larger stop on the remainder, and use that remainder shares as a intraday swing position. And it's a very intelligent approach. And it works very often, because oftentimes I'll get shaken out, sure enough, on the first breakout. And since I didn't sell the entire position, I still got 50 or 100 shares left in my hip pocket that are remainder shares that stay alive, and ultimately they often will come back to life and keep going up. So if you've ever been, as we all are, right, in the position, especially intraday trading, where it runs up, you get shaken out, and then it runs up much further without you, and it's very frustrating, which I've experienced since the year 1999. You have my word on that. It's very important to instead use a dual exit. So, and that's a smart professional trading approach. So small stop, tight stop on most of it, larger stop on the remainder. And often the remainder will overcome the cost of the initial small stop and put you in the money for an intraday swing that you then close out 3:30, 4 o'clock, right before 4. Don't wait until right before 4. Even though you can always trade aftermarket, I like to get my trades done by around 3:55 or so. Oh, hey, Amedi, may I register for the live Monday? Yeah, the link would be useful. Yeah, it's tradingtheopen.com/free. So for the free Monday event, just go to tradingtheopen.com/free. We got to wrap up. I'm over time here. Let me put that visually here so we can all see it. Come on, PowerPoint. There you go. So coming up Monday morning, that's our call to action. Do register. You'll see me trade live. And I don't BS by saying I'm trading thousands of shares and making $5,000 a day. Nobody does that. Like I said, these kids are out there saying they're making a fortune in momentum. They're not telling you the whole story. Ask for their tax return proof. And they won't give it to you because they're BSing you, right? That's the truth of the matter. Ask for tax return proof, like I've shown, right? Oftentimes the people out there, it's like that old, I'll close with this story. You look like a freaking genius if you send half of your email list an email saying the market's going up, another half an email saying the market's going down. And of course, half of your list, you'll look like a genius. The other half, you look like a moron. Well, let's say the market goes up. So then with only that half of the list, you then splinter it into another email that says the market's going to keep going up, or the market's going to reverse and go down. And then one of those groups will be right. And you keep segmenting until after the 5th or 6th go around, the portion of the list that's left, you've been right 6 out of 6 times. Even though you weren't, it looks like you were to that portion of your list. That's the kind of BS conmanship that goes on in the trading industry. So that goes on with a lot of these momentum stock rooms. They'll run 2 different trading accounts. They'll go long in one that they tell the room about, but they're going short in the other. So that way, even if they take a stop on the long position, they're covered with the short P&L in the other one that they didn't tell anyone about, right? So it's a lot of shenanigans out there. So if it sounds too good to be true, it is. All right. I'm a big fan of not making big performance claims and not trying to BS the industry. I like to be honest. And that's why I got the trust of the world, right? So thanks to all of you for being with me. tradingtheopen.com/free. See you guys Monday morning. And if not, I'll see you next Saturday. Take care. I got to run because I've got swing scans coming up in about 7 minutes. Wow, thanks for the kind words. Yeah, Carrie, this is being recorded. The Trading the Open, this will go on my YouTube channel. The coaching portion, which is actually, I think, more valuable, it teaches you how to trade, not just what to trade. That video will be exclusively in the free members area at trademastery.com/join. So yes, it is being recorded. Hey, Ahmed, good point. You can pull up like State Farmers, some of those were. Question from Jurgen about a way to escape the day trading count rule. No, you should just be swing trading if you don't have the 25K. And that's the truth of it. There's all kinds of shenanigans, people out there saying, oh, you could trade multiple accounts. You could. Or you could trade an overseas broker. That's really stupid, and the IRS would agree with that. You do not ever want to trade with an overseas Bahamas-based broker. You become audit bait for the IRS. So never ever trade with an overseas broker. Of course, the guys who have secret JV relationships with such brokers and don't tell you about them won't tell you that, but I'm the honest guy. I'm the honest face of the industry. Don't ever trade with an overseas broker. You will get audited. Ask any CPA, right? You're just asking for trouble, so don't do that. And also, it's a bad idea because they're not regulated. They could walk away with your money at the drop of a hat anyway, so don't do that. For day trading, you want to use Interactive Brokers. #1 rated Reader's Choice Award in stocks and commodities for years. I'm a 10-year plus IB customer, and I like Interactive Brokers. For swing trading, any of the major American brokerages, I like Ameritrade. I got an Ameritrade account. Fidelity's fine, etc. So anyway, that's it. I got to wrap. You guys take care. You've been amazing. I thank you for your time and your energy and your attention. Let's go get them and trade smart out there.